James Cooper, you've had a great couple of weeks at the conferences, and you came back with a big cold. So nice drop from the precipice. But you're recovering now, aren't you?
Yeah, absolutely. Yeah. Just one of those things. You're traveling, you're on planes and
Yeah, yeah,
meeting a lot of people, you inevitably pick something up. So just
yeah.
part of life.
But it hasn't stopped you writing about the resources market today. You draw a pretty good parallel between China's urbanization-driven iron ore boom from the last, which drove the last resources cycle, and you draw parallels to that and the emerging critical minerals opportunity in what you say is the next key driver, the next boom. I was going to ask, what key differences do you see in this cycle that might play out compared to the iron ore boom, particularly for
Yeah.
Australian
So
investors?
I guess commodity cycles, and you got to follow the big themes. So I think most people would know that the big theme from the early 2000s was the China led boom.
Yeah,
Um, And we know that was infrastructure, so a huge amount of housing being built for this mass migration of people moving from rural areas to cities. So I think it was about 21 million people each year. So almost as Australia's population moving to the cities each year. And that
yeah,
just caused a massive demand for commodities, copper, iron ore. And that was the demand driven factor of the last boom. But each cycle is a little bit different. So I guess the key theme, and it's pretty obvious from a number of metrics, that the key theme in this coming commodity cycle will be centered around critical minerals. And I guess the reason I say that, well, I guess you really need to see where the big money is going. So if you look at BHP, so BHP has invested a huge amount of capital into copper developments. Um, so I guess I should say is that all the iron ore miners from the last boom, so that includes BHP, Rio Tinto, Fortescue, and Gina Reinhart's Hancock Prospecting. So these were the big four major iron ore miners from that first boom. But all four of those companies are now pivoting in a big way to critical minerals. So yeah, the BHP example, there was copper, so it's putting just the other day, last week, I think it announced it's putting $14 billion into expanding the world's largest copper deposit in Escondida in Chile. It just made a multi-billion-dollar bid for a copper developer in Argentina. And then there's Rio Tinto, so the world's another big iron ore miner. It basically planted its flag in lithium for the first time with the big acquisition of Arcadium. And then there's Andrew Forrest, so he's putting a lot of investment into nickel, platinum, rare earth, so all critical minerals, all projects. Another iron ore miner who's looking at critical mineral projects. Then
yeah,
finally, Gina Reinhart. So she's the Hancock Prospecting um, uh, figurehead. So she's putting a lot of money into rare earths and lithium projects across the world, Australia and international projects. So there's this big common thread trend with big iron ore miners shifting into critical minerals. And I think this is just, although the market for critical minerals is definitely tapered off in the last 18 months, I think it's really important just to follow what this big money is doing.
follow the money. Yeah, yeah, because these players they've been in the business for a long time, right? They're not going to throw money around like that if they don't think that's where the trend's going, right? Makes sense. How should investors think about which specific critical mineral sectors offer the most opportunities, just from a private investor perspective, or would you say what you want to do is try and get a bit of exposure to all of them?
Yeah, no, that's a really good question. So how do you know? I guess first of all, and we'll dive into this later
Yeah,
in a presentation, which we'll talk about critical minerals. So they're metals or minerals that have some supply um, issue. So geopolitics, maybe it's constrained supply, but they're
yeah,
critical for national security. So that could be defense, technology. So that's basically just a very quick definition of what critical minerals are. But that encompasses so many different commodities. And we know things like lithium, graphite, they've really stolen a lot of attention over the last couple of years. Excuse me. But um, in what we tend to focus on with diggers and drillers is looking at some of the more niche critical minerals that aren't
mm,
really spoken about that much. So one of them is titanium. So this is really important for aircraft manufacturing. I
yeah,
think the Boeing, about 15% of the Boeing 747 is made up of titanium. So a huge amount of this titanium alloy goes into building these Boeing aircraft. So um, it's critical minerals like this which are really, really important to focus on. But what are the supply dynamics for something like titanium? This is something we've been able to uncover through a lot of research. Just identifying that there's very tight supply in very specific areas around the world, and
mm,
a lot of that supply is held up in places like Russia or China, where uncertainties with geopolitics could disrupt supply chains. So that's
yeah, right.
really just one example.
So the last boom, the iron ore boom, created massive wealth really through companies like Fortescue, which, as we know, grew from like 2 cents initially right up to $10 and beyond over years as it kind of established a leading position in the market. In the critical metals or mineral space, what characteristics should investors look for to identify good bets on stocks in their early stages? Because it's one thing obviously to look at the commodity itself and think, right, there's going to be strong demand and there's going to be supply issues. But then when it comes to the companies themselves, that's a whole other level of analysis, right? Because they've got budgets, they've got management teams, they've got jurisdictional issues and all this sort of stuff. So they've got to be a profitable business as well. Is there any? Can you give? I know that's a very detailed question,
Yeah.
but is there any broad stroke things that people can look for?
Yeah, well, one of the complications, I guess, with critical minerals is what we call the downstream, so the processing, and that's, I guess, a lot more complicated than something like gold or iron ore, where you're just digging the ore out of the ground and sending it to, or at least for iron ore, you're sending it to China for
Yeah,
processing into steel. Whereas critical minerals in Australia, a big part of that is going to be processing that often at the mine site itself. So that's going to require a lot more capital investment to
hmm
get these projects underway. Um, but I think focusing on projects which are sort of more early movers, um, perhaps ones that already have financing in place to get these um, capital intensive projects underway. They've already got the financing there. So there are a number of those companies, and I think that will really give them the edge once the demand picks up for these critical minerals, or once we see sort of certain, I don't know, global fragmentation in trade,
yeah,
which suddenly puts a lot of demand on these limited number of suppliers.
yeah. I guess that's the first initial hurdle that companies need, right? Is the find that makes total sense. Um, in your piece today, you mentioned that the spoils go to those who invest early and stick with it through the upward leg of the cycle. Obviously, we're not quite there yet, but it's time to make the move now. Given the volatility in junior mining stocks generally, what practical approach can you suggest for investors to maintain conviction through the inevitable volatility? Because there will be volatility, right? I mean, especially in the junior mining sector.
Yeah, well, one of the great things about investing in a market like now for critical minerals is that we've already gone through a major period of sort of bearish volatility where stocks are now trading sort of well below their peaks from a couple of years ago. So there's a lot of value in the critical mineral space. So I think that that does then allow you to sort of hold through future volatility, because we're probably buying fairly close to a major low. So I think that certainly helps, and that's why focusing on a sort of value market, which critical minerals represent right now, is really a great way to sort of hold on to these trends for the long term. I guess, back to the Fortescue example, and these junior iron ore miners from the early 2000s, similar to critical minerals today, there was a sort of a kind of broad understanding that China was emerging, just like today, that critical minerals and the need for these alternative supply chains is emerging, but there wasn't a lot of investment being put into these junior miners. But that changed rapidly. Within about 5 years, I think iron ore prices increased tenfold, up to 2008. So there's every chance we could see that again with critical minerals, especially if we see things on the big macro scale, like Trump and China start to really battle in terms of trade, and that's when you start to see perhaps China limiting its supply of critical minerals, and where you see projects in Australia or Canada having to sort of fulfill that gap. So, I think that's the important aspect for long-term investors. What's the big macro picture, and what's the underlying story of why I'm holding these stocks long-term?
Cool. And talking about stocks, final question or final point, really. Obviously, we've been quite busy lately in the office. We filmed a really in-depth presentation on, we've called it the new Big Four. Now, that's really a kind of a nod to the previous cycle where the mining industry in Australia and the world, to a certain extent, was really dominated by four key companies: BHP, Rio, Fortescue. What was the other one? WMC, but that was eventually swallowed up by BHP anyway, right?
That's right.
But the idea is, who will be the big key movers in the next cycle, and that's the sort of thing that that's the thing we're pondering, I guess. And you found some answers.
Exactly. And I think that's a really good opportunity in the market right now, and I think looking sort of 5 years ahead, I think that's where the sort of big commodity plays happen, when you sort of buy at these cycle lows. And
so look out for James's report, a presentation on that. I think it's due out. Well, this interview is going to be released today, Thursday, the 28th of November. That first live, the first streaming of that will be made available tomorrow on the 29th, and it'll be available for playing thereafter. So do join us, look out for that. And in the meantime, give James's article a read, the link of which is below in the description. Thanks, James, for your time. Much appreciated.
No problem at all. Cheers, Woody.
Cheers. Thanks for tuning in to FatTel Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. And as a thank you, we've got a free report just for you. It is packed with actionable insights that show you how to capitalize on an alternative investment idea that you'll unlikely find anywhere else. You can download it right now by clicking on the link in the description below. So, if you're ready to discover strategies that the traditional market just doesn't offer, grab your free report. Until next time.